Hello friends. So good morning everyone. Good morning. Good morning. So hope my voice is audible today. So it's properly coming in the V player. Yes, thank you. And tomorrow we will go for Zoom. Okay. Tomorrow we will be going for the Zoom session. So it I'll ensure that weekly, even twice or thrice also, we can have Zoom sessions so that you can interact with me. Okay, so I assure that, don't worry. So because yesterday when I was taking class, some students have said I think Samyukta and one more student also said, sir, we can continue in Zoom, but the problem is about the security aspect. So for that reason, nothing else. Okay, then next tomorrow's class, I'll let you know. Tomorrow's class will be, can we have a little extended session? You have any other classes? So I wanted to extend it till 10:30. I want to extend it till 10:30. Is it okay? So that this particular week, whatever we have discussed, including the Sunday's class, so we can have an interaction if you have missed out anything, etc. So for that reason. Okay. Done. Thank you then. And in last class, even tomorrow there is an assignment discussion also, that's why. So today I will be sharing you an assignment related to import of services, and related to that assignment we will be discussing tomorrow. That's the reason why I'm extending little late. Okay, so 10:30 we'll take up to 10:30. So we'll start at 7 to 8, 8 to 9, 9 to 9:30 we'll take a break, and then 9:30 to 10:30, 1 hour. Okay, now, so what we have discussed in our last class, we started with import of services. Import of services divide into two: OIDR, other than OIDR, and OIDR imported by non-taxable online recipient, taxable under FCM, imported by other than non-taxable online recipient, taxable under RCM, and then other than OIDR services imported by a non-taxable recipient is exempted, and imported by other than non-taxable recipient will be taxable under RCM. Non-taxable recipient is different from non-taxable online recipient. Non-taxable recipient means an individual who is unregistered, importing services for personal purpose, and government, whether they are registered or not under GST, importing service for other than business or commerce. Charitable trust under section 12AA, whether or not registered under GST, importing services for charitable activities. Whereas non-taxable online recipient means any person who is unregistered and importing services for other than business or commerce, that is for personal purpose. So then we proceeded to section, related party definition. So explanation to section 15. In that explanation to section 15, we have seen few points. Number one, such persons or officers or directors of one another's business. And number two, they are legally recognized partners of a firm. Number three, employer and employee. Then point number four, one person directly or indirectly owns, holds or controls 25% or more of the outstanding voting stock or shares of both of them. So that is when there are two companies and those two companies have a common shareholder. So definitely those two companies will be related if that common shareholder is holding 25% or more in both of those companies. And then the fifth point is one person directly or indirectly controls the other. So what is the meaning of control? So control is not defined. So we took investment greater than 50% and majority common board of directors and controlling the operations. Okay. So now let's proceed to the remaining aspects. So have a look into your book. So you take point number 6. Point number 6. Both of them are directly or indirectly controlled by a third person. both of them are directly, indirectly controlled by a third person. What does it mean? That is, there are two companies and two companies are under the common control. So when these two companies are under the common control, even though one is not investing in the other, but they both have a common entity which is controlling. Due to that reason, these two people are treated as related. So that is, for example, listen. For example, here, if I am taking A Limited, X Limited and Y Limited. Okay, A Limited, X Limited and Y Limited. A Limited has invested, 51%, that is greater than 50% in X Limited and greater than 50% in Y Limited. Now, X Limited and Y Limited becomes related under this point because they both are under the common control. So they will be treated as related. Who? X Limited and Y Limited. So where is this given? This is given in point number 6. Now you take another one, point number 4. As per point number 4, if you see, same A Limited, X Limited and Y Limited. So A Limited is holding 25% or more in X Limited and A Limited is holding 25% or more in Y Limited. Okay. Now X Limited and Y Limited becomes related or not? Yes. Then why we need 50%? Why we need 50%? So 50% is not required. Just 25%, greater than or equals to 25% itself is sufficient to make them related. Okay. So therefore, point number 6 is a repetition? No. Because in point number 6, not only through investment, the control can be through composition of board of directors or through control of operations. Okay. So therefore, point number 6 not only covers investment greater than 50, but also what? But also majority common board of directors or control of operations. Okay. So therefore, this will be coming under related. Understood? This will be coming under related. So here, what we need to understand here is that, so X Limited and Y Limited are treated as related. So not only because of the investment, even if A Limited and X Limited has majority common board of directors, A Limited and Y Limited is having majority common board of directors. So they both are under the common control. So X Limited and Y Limited will become related. And if A Limited controls the operations of X Limited, A Limited controls the operations of Y Limited, then also X Limited and Y Limited will become related. Sir, I am just repeating the point related to controlling the operations. What is this controlling the operations? I'll give you a practical example. Okay. So what has happened? There was one public limited company by name MT Educare Limited. Hope you are aware of this. So if you belong to Chennai, if you have attended CA intermediate classes, there you could have attended, or even otherwise you might be aware of this. So it was a public limited company. And what has happened? in that public limited company, like they ventured into one product called as Robomate, like that one product they have ventured, and that was related to the e-learning. Had it been today, it would have been massive, but they did not do that. They did it in last like 5 years before, and they roped in lot of big celebrities and all, and they spent huge money, and over a span of time they could not realize that much return. So therefore what they did, they were forced to liquidate, but that could not happen. That people inside did not let it happen. So what they did, they approached one another company called as Z-Learn. So this is like Z Entertainment is there, no? So that group, so Z-Learn they approached, and that Z-Learn has invested, but the investment value is just 47 or 48%. That's it. But they made one condition that we need to control the operations of the company, and all the board of directors have retired, and that Z-Learn board has taken over the board of this company. So this is what I am referring to as controlling the operations. Another example also I'll give you. Generally in hotel industry, you will come across this control of operations. So some hotels, when they are not able to run that hotel, so because of varied reasons, there could be varied reasons, they may not be in a position to run that hotel. So they will be approaching, one person to take over the operations of that hotel. For example, Tribo you would have heard of. Tribo, a brand name Tribo. So Tribo is having expertise in doing the hotel business. So therefore, lot of hotels across the country has been taken by Tribo for operations. That hotel owner will give the operations to that Tribo group, and they will be getting money. So therefore, this is like, even though they have not invested, but they are controlling the operations of that particular hotel, which means that control exists. Understood or not? So therefore, this is what I mean to say here. Yes, point 6. So in point 6, there will be something called as control of operations also will be treated as control. Okay. So in point number 5, there were 3 meanings of control. Investment greater than 50, a majority common board of directors, controlling the operations. So that 3 points also are applicable in point number 6. But in point number 4, it is just the 25% point. Okay. So apart from investment, there is no other criteria. But in point number 6, they use the word control. So control already we know. So we have the vague meaning of control. So therefore, whatever control that we discussed in the 5th point, that can be applied here. That's where if you see here, A Limited and B Limited. A Limited and B Limited is having some board of directors. A, B, C, F, A, B, D, F. So if you see, three are common. A, B and F are common between A Limited and B Limited. So as 3 out of 4 are common, therefore A Limited and B Limited are related as per point number 5. They both are, okay, they both are coming under related. Then again, A Limited and C Limited. If you see board of directors composition, A, B, C, F, here A, B, C, E. So again, 3 out of 4 are common. So therefore, A Limited and C Limited is also related as per point number 6. Now, B Limited and C Limited, if you see the board of directors, ABDF, ABCE, so only 2 out of 4 are common. That is not majority. 2 out of 4 is not majority. Therefore, as such, they are not related under point number 5, but under point number 6, they will become related because they both are under the common control. They both are under the common control due to that reason. Okay. See, taking over is not the point which I am referring to. When you take over, the other company is not in existence, Ganesh. When you take over, the other company is not in existence. So I'm talking about controlling the operations, means not takeover. So it is like the other company will also be in existence, but the operations are carried out. The operations, to the extent of operations only. So the one company is doing the operations of the other company. That's where the control exists. Okay. So taken over, we don't have to bother about it. Once it is taken over, no doubt they are related, because without investment, how that will be taken over? So definitely investment should be there. Otherwise, the taking over cannot be possible. So I'm not talking about that investment, etc. and all. I'm talking about the control of operations. And usually it will be into the same line of business only it will happen. Otherwise, the control of operations cannot be there. Okay. So usually in the same line of business when both the people are in, so it will happen that way. Then point number 7. Together, they directly or indirectly control a third person. What is this? Independently, they are not controlling. Independently, they are not controlling. But together, they are controlling. For example, A Limited has invested 30% in X Limited. Is the A Limited is controlling X Limited? No. A Limited is not controlling X Limited. Same way, B Limited holds 25% in X Limited. Whether B Limited is controlling X Limited? No. But together, if you add A Limited and B Limited, so together if you add 30 and 25, 55%, so therefore together they control X Limited. So therefore it will be treated as related. Who will be treated as related? This A Limited and B Limited will be treated as related. A Limited and B Limited are treated as related. Understood? A Limited and B Limited are treated as related. Got it here? Then next. So here, sir, you might get a doubt. Sir, all shareholders of a company control the company. So can I say that shareholders of the company are related? No. So when you talk about related, you take only two parties, supplier and recipient. So whether supplier of the transaction and recipient of the transaction are two shareholders of a company, whether they both control a company, yes, then they both are related. But you cannot say all shareholders of a company are related. So that is important point. So try to make note all shareholders of a company, all shareholders of a company are not related. All shareholders of a company are not related. Okay. Then next year, look into point number 8. So this is point number 7. Point number 8. They are members of the same family. So what does family means? Family means spouse and children. Thank God they gave the definition of family. Otherwise, we would have taken the family definition as per some other law, like Companies Act, etc. So family means the spouse and children of the person, whether or not dependent, and the parents, grandparents, brothers and sisters of the person, if they are wholly and mainly dependent on the said person. Okay. So who will be taken as family? Spouse and children. Spouse and children of the person, whether or not dependent. Then parents, grandparents, brothers and sisters of the person, if they are wholly and mainly dependent on the said person. You understood what I am telling? So therefore, so for a person, his spouse, okay, and children, they need not be dependent. They will always be treated as family. But brothers, sisters, parents, grandparents, okay, they will be treated as a family only if they are wholly and mainly dependent on that person. Okay, so then only they are all treated as related to that person. So therefore, who should be dependent on the said person? So brother, brother should be dependent, even sister should be dependent, father, mother, then all the grandparents dependent, then only will be coming under family definition. Whereas spouse, son and daughter need not be. So what is the meaning of wholly and mainly dependent? Wholly and mainly dependent means, so this person is taking care of the living of that particular person, other person. So then it will be called as wholly and mainly dependent. Okay. Now this we will not come to know, and the person who is making the transaction should come to know. We don't have to. We are third party. But the one who is making the transaction, that person should come to know about it and whether they are dependent or not on him. And if they are dependent, that's a related party transaction and he need to comply with the provisions of the law. What will happen if he is not complying with the provisions of the law? GST department will be doing the audit. They will identify these transactions and they will be asking him to pay the tax and recover the penalty, interest, etc. Okay. So I'm talking about the compliance to be followed. If you are not following the compliance, so you have to pay the price, that is penalty and interest. And this person should decide when they are dependent. Are they living on this person's earnings? Yes, then they are dependent on him, like that. Okay. Wholly and mainly dependent. Now, there is one issue in this case, that is, say this, there is one person, Mr. Dasarath. Mr. Dasarath is grandfather of Mr. Lava. Mr. Lava is the grandson of Mr. Dasarath. Now, Mr. Dasarath is supplying some goods to Mr. Lava. So now, from whose perspective we should see? So Dasarath's perspective. So to Mr. Dasarath, whether Mr. Lava is family or not? No. Grandchildren are not covered under family. For a grandfather, so you keep person, you keep the grandfather under person. You keep grandfather under person. So grandchildren is not there, only children. But grandchildren is not there. The second line is not there. So therefore, it is not a family. Even though Mr. Lava is dependent on Mr. Dasarath, it is not a related party transaction. Why? Because Mr. Dasarath, his grandson is not covered under family. Got it? Then next. So from person, who is the person here? Mr. Dasarath. So his grandson is not covered under family. Then suppose if it is reverse. Mr. Lava is making supply of goods to Mr. Dasarath and Mr. Dasarath is dependent on Mr. Lava. This is another situation. Now in that case, now who should be seen as person? Mr. Lava. So whether grandfather is like family? Yes, grandfather is family because two layers up, two levels up. So parents and grandparents. So grandfather will come under family. So that will become a related party transaction. See here. One side it is not a related party transaction, whereas the other side it becomes a related party transaction. So funny, isn't it? So the one who drafted this has missed this point. Okay. So it's a related party transaction. Person here is Mr. Lava. His grandfather dependent on him is covered under family definition. So this is about the first issue. Then another issue I will give you. Mr. Ram is a person and Mr. Kusha is a person who is in India. So he is son of Mr. Ram and he is not dependent on Mr. Ram. Okay. Now Mr. Ram supplies some services to Mr. Kusha and son, whether or not dependent, is a related party transaction. Correct? Son, whether or not dependent, is always falling under family. Now, what if Mr. Ram is located outside India and is not dependent on Mr. Kusha? What if Mr. Ram is located outside India and is not dependent on Mr. Kusha. Now, from whose perspective we need to interpret? Kusha's perspective. Why? See, import of services, we need to see from recipient perspective. What if Mr. Ram is located outside India and the son is located in India? His son is located in India. Now it's an import of service. In case of import of service, we need to see from the recipient perspective. So from Mr. Kusha's perspective, you see, and from Kusha's perspective, you see, his father will be family only if he is dependent. But in this case, he is not dependent. His father is not dependent on him. When his father is not dependent on him, it's not a related party transaction. You understood? When it is domestic, it becomes a related party transaction. When it is domestic, because we see from the supplier point of view. But when it is import of services, we see from the recipient point of view. So it is not a import of service. So here person is Mr. Kusha. As Mr. Ram is not dependent on Mr. Kusha, it is not covered under family. Therefore, it is not a related party transaction. Understood? So therefore, in case of normal transaction, in that person, we should keep the supplier and interpret. Suppose if it is import of service, in that person's place, we need to keep the recipient and interpret. Okay? Understood or not? So this is very, very tricky here. Please try to understand this. Simple only, but who is to be taken as person? If you get that clarity, then it is easily you can determine whether it is coming under family definition or not. So as such, family means what? Family means parents, grandparents, brothers, sisters, spouse and children. Spouse and children whether or not dependent, but all others wholly and mainly dependent on that person. And if it is normal transaction, in that person's place we should keep the supplier and interpret. If it is an import of service, we should keep the recipient and interpret. Okay? Then, so that's what we have discussed. Point number 9. Point number 9. Also, persons who are associated in the business of one another, in that one is the sole agent or sole distributor or sole concessionaire, howsoever described of the other, shall be deemed to be related. So what does it mean? Sir, sole selling agent or sole distributor or sole concessionaire is always deemed to be related. Sole distributor or sole concessionaire is always deemed to be related. So what does it mean? It means that, say, X Limited is a manufacturer and he appointed Mr. A as a distributor. Now Mr. A, he is sending goods and Mr. A sells the goods to various retailers, PQR retailers he will sell. Now all the goods are sold only through, X Limited is selling the goods to retailers only through Mr. A, distributor. Now that Mr. A, distributor, will be called as sole selling agent. And here X Limited and A will be treated as related because sole selling agent is always deemed to be related. Then next one, see the other part, that is X Limited, small change is there here. X Limited sells the goods. Just one line you draw. X Limited sells the goods directly to the retailers as well as through the distributor. Again, I am repeating. X Limited sells the goods directly as well as through the distributor. So directly also X Limited can sell the goods. And through a distributor also X Limited can sell the goods. So now in this case, this A is not a sole selling agent. Why not a sole selling agent? Who will become a sole selling agent? If I am supplying goods only through that person is called a sole selling agent. But X Limited in the second case is selling goods directly as well as through the distributor. So A is not a sole selling agent. So X Limited and Mr. A is not related. X Limited and Mr. A is not related. Okay. Then, sir, but section 71C import from related party is supplier point of view. Is it? Did I tell that way? Where here? Because in the summary, what I have given, I just took it. Where is that summary? See here. Import of service is from whose point of view? Recipient point of view. Recipient point of view. And again here 71B import of service also from whose point of view? Recipient point of view. I never said that import of services is from a supplier point of view. Import of services should always be interpreted from a recipient point of view. Okay. Then, so therefore this is about related party definition, and look into 4, 5, 6 unit. So fourth point is simple. There is a single there are two companies. These two companies have got a common shareholder, and that common shareholder is holding 25% or more in these two companies. So these two companies will become related. That is point number 4. Then point number 5 is there are only two companies. One is investing in the other more than 50%, or these two have common majority board of directors, or one company controls the operations of the other company. Then they both are related. That is point number 5. Point number 6, again there are total three people, three parties. There are two companies. And which is being controlled by one other company. Okay. So total there are 3 entities. So one entity controls 2 entities. So because of that, those 2 entities will become related. And here control can be investment, control can be composition of board of directors, or controlling the operations. So that's what we have discussed. Okay. So you can also read it once. You will be able to understand this. Still, if you have not understood, you ask me tomorrow. Again, I will repeat. No issues. Okay. So we completed related definition, total 9 points. Number 1, such persons are officers or directors of one another's business, and they are legally recognized partners of a firm, and they are employer and employee. And next, point number 4, one person directly or indirectly owns, holds or controls 25% or more of the outstanding voting stock or shares of both of them. And next, point number 5, one person directly or indirectly controls the other. And point number 6, they both are under the common control. And point number 7, together they control another person. Point number 8, they are members of the same family. And point number 9, sole selling agent. Okay. Now, look into this illustration. Mr. Ram making sale of goods to Mrs. Ram. Mr. Ram making sale of goods to Mrs. Ram. In this case, so Mrs. Ram is spouse. So spouse will always come under family. Therefore, is it a related party transaction? Yes, it's a related party transaction. Then, so where it will come? Family, related family. Mr. Ram making sale of goods to brother of Mrs. Ram. So brother covered under family. Therefore, it is a related party transaction. Is it true? No. In-laws are not covered under family definition. All in-laws, brother-in-law, sister-in-law, father-in-law, mother-in-law, and then even son-in-law, daughter-in-law, in-laws are not covered under family definition, which means that, so Mr. Ram making sale of goods to brother of Mrs. Ram. So he is a brother of Mrs. Ram, not Mr. Ram. Therefore, it is not a related party transaction because family definition do not include in-laws. Then, don't tell this outside. Maybe the one who drafted this would have been single. So, otherwise, how it can be here. How in-laws cannot be treated as family here? So definitely that will not happen. Then next, Mr. Ram making sale of goods to grandson of Mr. Ram. Grandchildren again is not coming under family definition. So grandchildren is not covered under family definition. So it's not a related party transaction. Then next, point number 4. X Limited making sale of goods to Y Limited, where X Limited holds 40% in the equity of Y Limited. Sir, 25% is there, sir. Therefore, they are related. 25% is there, therefore they are related. No. So 25% is applicable only when there are 3 parties, 2 companies having the common shareholder. Here there are 2 entities, X Limited and Y Limited. So 40% is not greater than 50%. It is less than or equals to 50%. So it is not control. Control is not there. So due to that reason, it's not a related party transaction between them. Then next, Kohli is MD of X Limited and Anushka is MD of Y Limited. Kohli is husband of Anushka. X Limited renders services to Y Limited. Now in this case, whether X Limited and Y Limited are treated as related or not. See, controlling operations is a very vague term. So therefore, direct or indirectly control is there. So as 2 companies are owned by husband and wife, husband owns one company and wife owns another company. So generally, it is interpreted as related transaction between those 2 companies. However, what will happen here? They can give to the satisfaction, they can prove to the satisfaction of the GST officer that they both are not related. They can prove that they both are not related, in the sense like those 2 companies are not related because these 2 companies are independent and they are not controlling the operations of the other. Husband is not controlling the operations of the wife's company and wife is not controlling the operations of the husband's company. So therefore, control of operations is not there. Like that, if they prove, then it is not a related party transaction. So but always the benefit of doubt is there and GST officer will classify it as related party transaction. It is they who should prove to the satisfaction that it is not a related party transaction. Okay, so where it will be coming under indirect control of operations. If proved contrary, then X Limited and Y Limited are not related. Okay, then next one. So point number 4 is simple, Shravan. There are 2 entities. X Limited is holding 40% in Y Limited. So the 25% point don't bring here. The 25% point is not X Limited holding in Y. For both X and Y, a common shareholder is holding 25% or more. Then only that point number 4 will come. So here it is point number 5, that is control. So to exercise control, what should be the investment? Investment should be greater than 50%. So in this case, the investment does not exceed 50%. So therefore, control is not there. That's why X Limited and Y Limited are not treated as related. Okay. How it is indirect control of operation? Because there are 2 companies, and when there are 2 companies and husband is owning one company and wife is owning another company, so not necessarily that there is a direct control of operations by entering into any agreement between X Limited and Y Limited. So because they use the word directly or indirectly control. So indirect control refers to, so these 2 people are related, the owners are related. So when the owners are related and the companies which they are holding in may have control of operations. I never said that there is control of operations. I never said that. What I said is that in this case, the GST officer will invoke indirect control of operations, and like how you asked me, how there could be indirect control of operations, that only they both should ask GST officer and prove that there is no control of operations. So therefore, it won't become related at that point of time. So, but always the officer will invoke the indirect control of operations, because I told you control is not defined, and that too they use over directly or indirectly, as these two companies are owned by no one husband and wife. So possibility is there where GST officer may tell there is indirect control of operations, but X Limited and Y Limited, represented by Kohli and Anushka, should prove that there is no indirect control of operations. Then there won't be any related party transaction. But sir, according to me, it is not a related party transaction. Clear? So in exam, put a if condition and write. That's what I have given here. So if proved contrary, then X Limited and Y Limited are not related. Okay. Then next, A Limited invests 26% in X Limited and also invests 26% in Y Limited. X Limited renders services to Y Limited. Now, there are three parties: A Limited, X Limited and Y Limited. So, A Limited is the common shareholder of X Limited and Y Limited. And how much is that A Limited is holding? A Limited is holding 26%, which is greater than or equals to 25%. Greater than or equals to 25%. So, X Limited and Y Limited, if there is any transactions, that will become related party transactions. A Limited is a common shareholder holding greater than or equals to 25% of two companies. Therefore, A Limited and B Limited will become related. X Limited and Y Limited will become related. Point number 4. So we are applying that point number 4. Then number 7. X Limited invests 13% in A Limited and Y Limited invests 13% in A Limited. X Limited renders services to Y Limited. X Limited renders services to Y Limited. Now in this case, will it become related party transaction between X Limited and Y Limited? No, because they together, whether they are controlling A Limited, X Limited and Y Limited, independently they are not controlling A Limited. Together are they controlling A Limited? No, because together how much is the investment? Just 26%. So how 26% will be called as control? So due to that reason, X Limited and Y Limited are not related. Then number 8, Mr. Anuj is one of the director of X Limited and he is also the director of Y Limited. X Limited sell goods to Y Limited. So one director will not be called as majority. One director will never be called as majority. How one director will be called as majority are not possible. So therefore, if there are minimum 2 directors, so one out of the 2, so will not be majority. So therefore, it's not a related party transaction between X Limited and Y Limited. And you may have a doubt. Sir, what if X Limited and Y Limited are 1% company? Is it given here that they are 1% company? No, na. So therefore, leave it. Then X Limited making supplies to Mr. Rahul, who is the sole distributor of X Limited. So sole distributor or sole selling agent, sole concessionaire are always treated as related. So it's a related party transaction. Then number 10. Mr. Ram renders services to Mr. Sham. They are partners of Messrs. RS & Co. They are partners of Messrs. RS & Co. See, partners of a firm are related, correct? Legally recognized firm. So I assume that RS & Co. is a legally recognized firm. Now the partners of that firm are always related. Okay. So this is about related party transactions or related parties meaning. So that we have discussed, and now there is an application of this to employer-employee relationship, and that part we will be discussing now. So this we are going to discuss now. But meanwhile, up to this, if you guys have any doubts, you can ask me. So Samyukta, is it clarified for you how it is indirect control of operations? Then Vamsi, I assume that for you also it is clarified how to know the dependency of the person on another. Okay. See, when you ask me a query, chat, if you have understood that, just give a feedback. Okay, thank you, or some just a thumb, some feedback you give. Okay. So otherwise, I will be having that will be pricking my mind that still you have not understood or what, I don't know. That's why. So give me a feedback whether if you have understood that doubt, like whatever query you have asked. Then now look into this analysis. Yes. Sir, so you are saying it is indirect control of operations because GST officer invokes or assumes both owners are related and there may be control of operations. Whereas Kohli and Anushka may have to prove otherwise to the GST officer. Correct? Yes, yes, exactly. That's what I mean to say. Exactly, that's what I mean to say. Question number 6 and question number 7 are same other than investment percentage. But why reasons are different? Ayyo, not same. Not same. Question number 6 is different. Question number 7 is different. In question number 6, A Limited invest in X Limited, A Limited invest in Y Limited. Okay? A Limited invest in X Limited, A Limited invest in Y Limited. Whereas question number 7 is X Limited invest in A Limited, Y Limited invest in A Limited. Completely it is different. Exactly mirror. So please try to understand that is, here it is A Limited who is investing in X Limited and Y Limited. Okay. So that is there. So now because they have a common shareholder, X Limited and Y Limited will become related. Now the reverse is X Limited, Y Limited. So both are investing in A Limited. Okay. So now in this case, we need to apply together. Together they control. Point number 7. So together they are not controlling A Limited due to that reason. Okay. There are two different points there. Then say this employer-employee relationship. We need to understand few points related to this. Okay. So just have a look into the screen or book if you have. You just take the Bare Act. You can see 71C Redwich Schedule 1, page number 38. Page number 38. So in that page number 38, look into point number 2. Supply of goods or services are both between related persons or between distinct persons as specified in section 25 when made in the course or furtherance of business, provided that, read that, provided that gifts not exceeding 50,000 rupees in value in a financial year by an employer to an employee, provided that gifts not exceeding 50,000 rupees in value in a financial year by an employer to an employee shall not be treated as supply of goods or services or both. You understood? So it will not be treated as supply of goods or services or both when if employer gives gifts value exceeding 50,000 rupees in a financial year, gifts not exceeding, like gifts not exceeding 50,000 in value. Why we need to discuss this? Because employer and employee are treated as related. Employer and employer are treated as related. If employer gives any goods or services to employee, even though without consideration, it will become related party transaction. So they gave a relief. If it is gifts, if the value of the gifts does not exceed 50,000, then it is not a supply. This 50,000 should be computed for a financial year. Suppose if the employee has joined somewhere, anywhere during the financial year, so for that part of the financial year only we should take. For example, he joined in October. So from October to March only, whatever is the gifts that is given should be taken into account. Okay. So that 50,000 per annum per employee up to, that is less than or equals to 50. What if it goes beyond 50,000? Whether entirely it is treated as supply and chargeable to GST? Yes, because they use the word not exceeding 50,000. If it exceeds 50,000, this proviso is not applicable. Consequently, it's a related party transaction and chargeable to GST. Now, this is one part. Then another point related to employer-employee, you please take Schedule 3. Schedule 3 is activities which will not be treated as supply. There are certain activities which will never be regarded as supply. In that you take employee to employer. So point number 1. So services by an employee to employer. Services by an employee to employer in the course of our relation to his employment is excluded from supply. It is not treated as supply. So employee to employer in the course of employment is excluded from supply and it is not treated as supply. Okay. So which means even though they are related, but employee rendering services to the employer for which employer pays salary, on that there is no GST. Okay, that is the meaning. Now, come back to this discussion. Come back to this. That is where we have started that employer-employee relationship. So, page number 62. Come back to page number 62. Now, there is one CBIC clarification. Have a look into that CBIC clarification. First point I told you that proviso. Gift not exceeding 50,000 rupees. That point. Second, services by employee to employer in the course of employment is excluded from supply. Then, another point you see. Employer and employee are treated as related persons and supplies made by employer to employee even though without consideration is treated as supply. However, employer gives certain benefits or gifts not exceeding 50,000 to an employee in a financial year is not treated as supply. In other words, if such benefits or gifts exceed 50,000 rupees and which is over and above its CTC as per salary offer document, it shall attract GST. So what does it mean? So it means that whatever is covered under the salary offer document, so that perquisites will not be coming under supply. Okay, so don't bring it under gift. What is gift? So gift is something which is not covered under salary offer document. If it is covered under salary offer document, it is not gift. Then what? It forms part of salary. When it forms part of salary, it will not be chargeable to GST. It is excluded from supply. So what is gift? So something which is not covered under the salary offer document. So that is only gift. Okay, that's where it is given. And that gift, if the value exceeds 50,000, then only it will become supply. Now, applying all these, I am just giving you a chart to understand. Say this. Supply of services by employee to employer. Services are rendered by employee to employer. Now, we need to check. Is it in the course of employment or not in the course of employment? If it is in the course of employment, then it is not a supply. Excluded from supply. See, excluded from supply or not a supply, both are same. Okay, don't worry. So, excluded from supply under section 7 subsection 2. When, if it is in the course of employment. Sir, what is the meaning of course of employment? Course of employment means as per the terms of employment contract, he need to render that services, he rendered, that is the meaning of course of employment. For example, there is a chartered accountant who is employed as finance manager for a salary of 1 lakh per month. So that will be excluded from supply. That 1 lakh per month is excluded from supply. Understood or not? Then, if it is not in the course of employment, means as per the salary contract, as per the employment contract, there is no such service to be rendered. But employer requests the employee to render such services. Okay. So therefore, that employer requests the employee to render some services. So now, when employer renders that services to the employee, employee renders the services to the employer, which is not as per the contract. So it is not in the course of employment. What is that, sir? Same example. A chartered accountant who is employed as finance manager. Now that company requests him to carry out a special assignment of conducting SOP audit with respect to a particular unit. Now he conducts the SOP audit and he gives his feedback. For that, the company has paid him some amount. Is it part of employment contract? No. So it is outside the employment contract. So it is not in the course of employment. Now, is it for consideration or without consideration? Say they paid 1 lakh to him. So for consideration. Is it in the course or furtherance of his profession? So is it in the course or furtherance of the profession of chartered accountant? Yes. So it is in the course or furtherance of his profession. So therefore, it will become supply under 7(1)(a), which means whether he need to pay GST, sir? Yes, provided he registers. See, it is supply. If he is registered, he need to pay GST. Otherwise, he is not required to pay GST. Then, not in the course or furtherance of business of employee. I'll give you an example. That is personal activities. So, apart from employment contract, the employee is doing some activities which are personal in nature, not in the course or furtherance of business. It is not a supply. Okay. Then next, without consideration. Suppose in that example of CA who is doing the SOP audit, suppose if consideration is not paid, then also will it become supply? Yes, because employee and employer are related even though there is no consideration. So it will become supply under 7(1)(c). What if it is a personal activity not in the course or furtherance of business? Leave it. It is not a supply. Okay. Then note, employer shall not supply goods to employer. Employee shall not supply goods to employer. That's why that is not given here. Next, there is one doubt for Ganesh. 1 lakh gold chain is given as gift by whom? Employer. Whether it will attract supply. Why an employer will give 1 lakh gold chain? Sorry, okay. Such a great employers are there in earth. I don't know. Suppose if at all that employer gives that. Now we need to see whether employer gives out of his pocket or it is taken from the company. So whether employer gives it out of his pocket or if it is taken from the company, we need to see. If it is given by the company, not out of his personal money, so from the company is only paid. Here the company is the employer, okay? Say the company is the employer. Now that's a business account. Out of the business account only 1 lakh gold chain has been given. Now in this case, as the value of the gift exceeds 50,000 per annum, it will be treated as supply in the hands of the company and it will be chargeable to GST. Clear? It will be chargeable to GST. Okay. Then sir, unnecessarily they will pay GST na sir? No. Unnecessarily they will not pay GST. Think logically. If it becomes supply, they need to pay GST. Already on purchase, they would have availed ITC. So that needs to be set off. Suppose sir, okay, at the time of purchase, they have not taken any ITC. So then in that case, sir, See, first of all, when the outward becomes supply, they can avail ITC. So even though there is a blocked credit, there is one point in a blocked credit. So goods purchased for distributing it as gifts or free samples, you cannot take ITC. But there is a CBIC clarification which provides that if the outward supply, if that gift or free sample becomes supply, then ITC can be availed. So that gold chain which is sold to that company, so they can take ITC, and again when they are giving it as gift to the employee, they can pay GST. So which means that just this ITC avail needs to be reversed. That's the logic, simple way. Okay. So nothing they are paying out of their pocket here. Next. So hope this chart you understood. Now we are moving on to the other chart. Supply of goods or services by employer to employee. Is it for consideration or without consideration? We need to understand. So, if it is for consideration, example, employer to employee for consideration. So, canteen facility or food, supply of food facility, or this vehicle, cab facility, etc., provided by employer to employee and charging some amount for that. So it will become supply under 7.1a, because activity for consideration in the course or furtherance of business. So it will become supply under 7.1a. But there are some contrary judgments, contrary advance rulings, which says that it is not a supply because it comes under perquisite. It comes under perquisite part of salary of a document, and that amount is a minimal amount which will be collected. So therefore, it will not become supply. Like that also we have a contrary judgment. Okay. But sir, in exam what we need to write? So you need to write that it is supply under section 7.1a, activity for consideration in the course or furtherance of business. However, if it is forming part of salary, it is not a supply. Like that you write. However, if it is forming part of salary, it is not a supply. Got it? Then next. Suppose if it is without consideration. So without consideration, 1 rupee also is not taken by the employer. Is it perquisite or gift? You check. If it is covered under the salary of a document, then it is a perquisite, not a supply. If it is not covered under salary of a document, then it is a gift. The gift value does not exceed 50,000 per annum per employee, not a supply. If the value of the gift exceeds 50,000 per annum per employee, okay, here value of gift, this is value of gift, okay, exceeds, value of gift exceeds or does not exceed 50,000, you need to check. If the value of the gift exceeds 50,000, it is supply. Entire value will be supply under section 7.1c. So these two charts gives you the clarity related to employer-employee relationship and its taxability. Okay. And if you have any doubts up to this, you can ask. So we completed related definition here. So what is it we have seen? So total 9 points in the related definition we have seen. And thereafter we proceeded to employer-employee. So what we have seen in employer-employee, employee rendering services to employer. In the course of employment, not a supply. Not in the course of employment. Check is it related in the course or furtherance of their business. For a consideration, 7.1a. Without consideration, 7.1c. Not in the course or furtherance of their business, not a supply. Same way, employer supplying goods or services to employee for a consideration, 7.1a. However, there are some advanced rulings which says that if it is forming part of salary, it is not covered under supply. Then next, suppose if it is, without any consideration, is it perquisite or gift? We need to check. If it is perquisite, not a supply, that is covered under salary of a document. If it is not a perquisite, then it is a gift. So value of gift does not exceed 50,000, not a supply. Exceed 50,000 in a financial year, it will become supply under 7.1c. Okay. Now go back. So we just discussed related party transaction to understand, because import of services from a related person also is there, na? That's why. Now, so take page number 54. Take page number 54, section 7.1c. The activity specified in schedule 1 made or agreed to be made without a consideration. What are those 4 activities? DRAP, disposal of business asset on which ITC availed, related party transaction including transaction between distinct person, import of service from related person, and principal agent transactions. Okay. So these are the four transactions or 4 activities which are covered under schedule 1. So it will become supply even though without consideration. Okay. Now I am analyzing each and every point one by one. D for disposal of business asset. What is that given? Permanent transfer or disposal of business asset where ITC has been availed on such assets. So we purchase some assets on which ITC availed. When we dispose it off without any consideration, then it will become supply under 7.1c. Now listen, I am disposing of a business asset for consideration. Okay, I am disposing of a business asset for consideration, and ITC is not availed. ITC is not availed. Will it become supply under 7.1c? First of all, when it is for consideration, don't apply 7.1c. You should apply 7.1a. For 7.1a, nowhere it is given that it should be like disposal should be business asset on which ITC avail. Whether you avail ITC or not avail ITC, that is irrelevant when you are selling the business asset. When you are disposing of the business asset for consideration, supply under 7.1a, whether ITC availed or ITC not availed. Understood? Whereas if it is without consideration, check whether ITC availed on the business asset or not. If ITC is availed on business asset, it is supply under 7.1c. If ITC not availed on business asset, it is not a supply. Why it is not a supply if ITC not availed on business asset? Because what does 7.1c says? Disposal of business asset on which ITC is availed. Correct or not? So therefore, there is no consideration, so 7.1a will not come. And ITC not availed, so 7.1c will not come. And 7.1b also will not come. Section 7.1a will not come because there is no consideration. And section 7.1b will not come because it is not import of services. And even 7.1c will not come. Section 7.1c will not come because ITC not availed. So due to that reason, it is not a supply. Okay. Now, from here, we are jumping to valuation and payment of GST. That is, fine sir, it is supply, but on what I should pay GST? It is supply. Okay, super. On what I should pay GST? Disposal of business asset on which ITC is availed is there, na? So once it becomes supply, on what I need to pay GST? We have 118 subsection 6. One section is there which says that if you buy any capital goods. Sir, what are capital goods? Any goods which are capitalized in the books of the recipient, that is known as capital goods. Okay. So a registered person purchases goods. Registered person purchases goods. Registered person purchases goods. And these goods, are capitalized in books. Capitalized in books or not capitalized in books. Not capitalized in books. If it is capitalized in books, it is known as capital goods. Means not capitalized in books means what? That is charged to P&L. That is charged to P&L. Charged to P&L. So then means it is not classified as capital expenditure. Then it will be coming under inputs. Okay. So there is a registered person who purchases goods. Whether those goods purchased or capitalized in the books, yes, it will be capital goods. Not capitalized in the books, then it will be treated as input. Okay. Now, 18 subsection 6 has got one provision. You read it first. You read it first. I have given it below. You read this provision first. This is given in 18 subsection 6. You please read it once. Meanwhile, there is one query. Sir, what if ITC is not availed? Assuming asset is purchased in 2016, but credit claimed under previous law. Okay. That is, whenever a person purchased an asset under earlier law, he would have availed Senvat credit and state VAT credit. There are two credits, Senvat credit and state VAT credit. Excise duty paid will be taken as Senvat credit and value added tax will be taken as state VAT credit. And so GST law facilitated a transition. In that transition, what happened? Everyone was requested to file the Tran 1 return. So that is, what are the assets which you have purchased under earlier law, or what is the stock that you have purchased under earlier law which you want to take it to the new law that is under GST, you please file a Tran 1. So those who filed the Tran 1, the Senvat credit was migrated to CGST credit and state VAT credit was migrated to SGST credit. So therefore, when you purchase it in 2016, you need to check whether Tran 1 has been filed and those credits are migrated to GST credits. Then ITC is availed under GST. Therefore, this point will be applicable supply under 7(1)(c) disposal of business asset on which ITC is availed. Suppose Tran 1 is not filed. So when Tran 1 is not filed, that credit is not migrated. So therefore, it is as good as disposal of business asset on which ITC is not availed. Okay. So again, I am repeating that point. So carefully you listen. That is, with effect from 1/7/2017 only GST is applicable. Okay. Say asset is purchased before that period. So as our friend has asked, 2016 asset purchased. Okay. Asset purchased in 2016. When asset is purchased in 2016, okay. So what is available? Senvat credit and state VAT credit. So Senvat credit with respect to excise duty paid. State VAT credit with respect to VAT paid. Now, these two are migrated to GST. Tran 1 filed. Okay. So when Tran 1 is filed, what will happen? So this will be migrated to, okay. So the Senvat credit will become, once the Tran 1 is filed, this will become CGST credit. And this state VAT credit will become SGST credit. Now asset is disposed of. Asset disposed without consideration. Will it become supply under 7(1)(c)? Will it become supply under 7(1)(c)? Yes. it will become supply under section 71C, disposal of business asset on which ITC is availed. Okay, clear? Suppose if Tran 1 is not filed, there is no migration, correct? So then it is not a supply. Okay, so therefore if on 1/7/2017, so here the asset is purchased, then so Senvat credit, that is excise duty is paid, and state VAT credit, that is VAT paid. Tran 1 not filed. So when Tran 1 is not filed, when Tran 1 is not filed, okay, asset is purchased, and when Tran 1 is not filed, so this CGST, SGST credit is not there. So credit not migrated. So credit under earlier law, not migrated. Okay, when it is not migrated, will it become supply when asset is disposed of? Without consideration. Okay, will it become supply? No, not a supply. When asset is disposed of without consideration, it will not become supplier. Okay, without consideration, it will not become supplier. Hope you understood this. Okay, but actually it is not relevant in present context because we crossed that 2017 long back itself, like we are in 2021. But maybe if you get a doubt like related to this, just apply this, you will understand. Then next, see this 18 subsection 6. So what does it says? You purchase some capital goods and you avail ITC on that capital goods, and you are disposing of that capital goods. Purchase of capital goods, availed ITC, and you are disposing of that capital goods. Okay, now in that case, what will be taken as the GST payable? So much of the ITC availed as reduced by 5% for every quarter or part thereof, or GST on sale value, whichever is higher is the GST payable. Now listen carefully. I am just explaining you what is this section 18 subsection 6. Section 18 subsection 6. When this is applicable? First, when it is applicable? Disposal of business asset. Disposal of business asset. So disposal of business asset. Okay. Next, disposal of business asset either for consideration or without consideration. So for consideration or without consideration, in both cases it is applicable. For consideration or without consideration. Then disposal of business asset for consideration or without consideration, on which ITC, that is disposal of not business asset, capital goods I'll take. Actually the words used are capital goods. Disposal of capital goods on which ITC availed. Disposal of capital goods on which ITC is availed. Okay. Now, so say for example on 25/4/2021, on 25/4/2021, CG, capital goods purchased, value rupees 10 lakhs, GST at 12%, say 1,20,000, 1,20,000. So total 11,20,000. Okay. So it is purchased. Now ITC availed. How much would be the ITC availed? ITC availed is 1,20,000. 1,20,000. Now from this date, you are using and you are disposing it off on, okay, say 14/7/2022. You are disposing it off on 14/7/2022. CG purchased on 25/4/2021, sold for rupees 6 lakhs. Sold for rupees 6 lakhs. Okay, this is the situation. Now what they are telling, for every quarter or part thereof, from the date of purchase till the date of disposal, how many quarters are there? Can you tell me? From the date of purchase till the date of disposal, how many quarters are there? So April, May, June, July, August, September, October, November, December, again Jan, Feb, March, April, May, June, even 14 days in July will be taken as one quarter, part thereof. So 6 quarters. So 6 quarters. Okay, 6 quarters. Again, I am telling April, May, June, July, August, September, October, November, December, Jan, Feb, March, April, May, June. So quarter or part thereof. Quarter or part thereof. So even one day in a quarter should be taken as full quarter. So therefore 6 quarters. Got it? 6 quarters. And 6 quarters into 5%. 6 quarters into 5%. That is 30% of the ITZ you can enjoy. 30% of ITZ can be enjoyed. 30% of ITZ can be enjoyed by that person. Next. Then what does it mean? See, because he used it for 6 quarters. So 5% per quarter you enjoy. Remaining 70% you reverse. Okay. So therefore, what will be taken as the GST payable upon disposal? GST payable is A, 1,20,000 into 70%. Why 70%? You used it for a period, na? So you enjoy 30%. Remaining 70% you need to see. So how much it comes to? 1,20,000 into 70%, that is 84,000. 84,000. Or B, GST on sale value. What is the sale value here? 6 lakhs. So 6 lakhs into, what is the rate? 12%. Okay, 72,000. 6 lakhs into 12%. From where we get 12%? GST rate is 12%. That is 72,000. Whichever is higher is the GST payable. That is 84,000. 84,000. Got it? So much of the ITC availed as reduced by. So much of the ITC availed as reduced by 5% for every quarter or part thereof from the date of purchase till the date of disposal. 5% for every quarter or part thereof from the date of purchase till the date of disposal, or GST on transaction value, whichever is higher should be taken. Got it? Now here, what if we are not selling? What if we are not selling? Okay. Suppose if it is not sold, what we should do? So disposal note. Such capital goods are not sold. Such capital goods are not sold but disposed without consideration, then what we need to do? So instead of transaction value, you need to take the value determined under rules. Okay, without consideration, then what we need to do? Instead of transaction value, instead of sale value, comma, as per CGST rules 2017, value needs to be determined. So we need to determine that value here. Okay. So as per CGST rule 2017, value needs to be determined. Usually we take open market value. So that open market value will be taken. That is usually OMV, open market value, just like your fair market value concept in income tax. So open market value considered. And we will be learning in detail in valuation, but I'm just telling you, usually it's open market value will be taken. Okay, so everything will be same. That is ITC into 70% and 6 lakhs. Instead of 6 lakhs, we will take the value as per rules. Then next, sir, if the ITC is availed on capital goods taking 5 years as life, that is 1/60 every month only, then if the asset is disposed of before the period of 5 years itself, how will GST payable be calculated, sir? Like this only GST payable is calculated. So because they are telling that when you are purchasing an asset, use it for 5 years. So that is considered as the life of the asset. How, sir, 5 years? Simple. 5% for 1 quarter. 2 quarters, 10. 3 quarters, you understood? So 5% for every quarter. So first year. So 5 fours are 20. So 5 years, 100, which means that you dispose it after 5 years. When you dispose it after 5 years, point A will not come. So you can enjoy that ITC. No one asks you to reverse the ITC. You enjoy the ITC. But the problem is when you dispose it off within the 5 years. When you dispose it off after 5 years, whatever is its sale value, on that only you need to pay GST. Because point number A will become 0. But when you dispose it off within 5 years, you have not used the asset. Then why are you enjoying that related ITC? That's the logic. Then next, how much we will collect from the buyer? 84,000. Whatever GST we pay, that much only will be collected from the buyer. So therefore, we will collect 84,000 from the buyer. Now buyer will be asking you, sir, I pay 6 lakhs. The rate of GST is 12%. Why are you collecting 84,000 from me? That's the difference between taxable value and invoice value. So here you will show invoice value as 6 lakhs, but you will show taxable value as not 6 lakhs. You need to do the reverse working and show that is 84,000. The rate 84,000 divided by 0.12. So the taxable value you show as 7 lakhs. The invoice value you show as 6 lakhs and the taxable value you show as 7 lakhs, and therefore you need to pay 84,000 rupees. How, sir? How that will be? So see this. So try to understand the difference between taxable value and the invoice value. So I'm just showing you this to understand the difference. So if you see, I'll just take GSTR1. An invoice needs to be generated. Okay. So one invoice needs to be generated here. B2B, add details. In that add details, so I will take here invoice value is there. Okay, so listen carefully. Receiver GSTIN or UIN. So some okay, say this invoice number, then invoice date. So this is the transaction in July month, and total invoice value. Total invoice value in our example, the invoice value is what? 6 lakhs. We are collecting 6 lakhs only from that person. We are collecting only 6 lakhs from that person. Okay, we are collecting 6 lakhs from that person. But in taxable value, we should not enter 6 lakhs. We should enter 12% rate. So you enter 7 lakhs. Then only 84,000 will come. And you need to click on save. Okay. So when you click on save, so the record is entered. So total invoice value, total taxable value. So now the GST is computed based on taxable value, not based on invoice value. You understood? If you give the invoice value as 6 lakhs and taxable value as 6 lakhs, the tax cannot be calculated as 84,000. So this is what we need to do. Okay. So therefore, how to delete this invoice here? Yes. Then this person will cry on me. Sorry. So therefore, this is how we need to do. Okay. I should not have saved. So such, now what we need to do? We need to take the invoice value as 6 lakhs and the taxable value. How we arrived at taxable value as 7 lakhs? We did reverse working. 84,000 divided by 0.12. So that is 7 lakhs we took. Okay. Then, sir, in this more input will reflect in purchaser 2A. Why more reflect? More will reflect. Whatever you have shown, that will only reflect. So what is the input to the recipient? 84 only. 84 only. Recipient will also take ITC based on what is the taxable value, not based on invoice value. Recipient will take ITC based on taxable value only. How much recipient has paid? 84,000. So 84,000 only will come. So 72,000 will not come. Okay. Then is there no problem? The invoice value less than taxable value? No issues. So in invoice value is less than taxable value, there is no issues. Generally taxable value will be more than invoice value because there will be some additions which we will take, which we will make. Example, subsidy received from any other person for the supply that we have made to this person. We are not receiving money from that person, but that should be added to the value. So taxable value, usually taxable value will be more than invoice value because of these reasons. Okay, it can be there. There is no issue in that. And the recipient will take ITC on the taxable value only, which means 84,000 only he will take credit. Okay. Then sir, he will recognize that at what price? He will recognize the asset at 6 lakhs only. He will recognize the asset at 6 lakhs, but the ITC that he availed will be 84,000. Okay. Then next year. So that is the example which I have given here. Have a look into this. Page number 55. Sir, in GSTR 3B, I want to reverse the ITC availed previously, right? Why you should reverse? Correct. So this, about this 84,000 you are asking. About this 84,000. This 84,000, what you can do? So you are creating an invoice. suppose if it is B2B, you are creating an invoice. Okay. So as you are creating an invoice, so this liability 84,000 will come into your GSTR 3B. So now don't do reversal. Don't do reversal of ITC. Why you are not required to reverse the ITC? Because 84,000 is created as a liability. Automatically from your credit balance it gets adjusted. So don't again reverse 84,000. That is stupidity. You should not. Had you not raised any invoice, if you have not raised any invoice because the recipient is unregistered. When the recipient is unregistered, he don't need any invoice for this. You understood? As the recipient is unregistered. In that case, what you need to do, don't report it in GSTR1. Don't report it in GSTR1. So you go to GSTR3B and reverse the ITC. Okay, don't report it in GSTR1. Directly go to GSTR3B under the reversal. So you can do the reversal of ITC. Okay, that also you can do. But in case of B2B, definitely the recipient requires ITC. So you need to create a liability. Two treatments are there. Any treatment you can follow. Okay. So again I am repeating. Of course, this is not for exam. This discussion is not for exam. This how to report it in portal is not for exam. What I am trying to convey is, so we need to create an invoice. Why we need to create an invoice? Because the recipient will be willing to take the ITC. So when you create an invoice, so that transaction will come as a liability. So 84,000 will come as a liability. Again, don't reverse any ITC. Whatever ITC you have, that gets adjusted here. Suppose if you are not raising invoice, maybe the recipient is unregistered, you are not raising any invoice, then in that case, you can go to GSTR 3B and you can reverse the ITC. But both don't do. If you do both, you know what does it mean? So you are adding to the liability 84,000 and you are again reversing 84,000. Means 2 times you are paying 84,000. Like that it will come. Okay. Then next. Does invoice value include GST? You can. Anything you can do. Invoice value is of course not at all relevant. Invoice value you can take including GST, excluding GST, whatever you want you do. Invoice value is relevant. Invoice value is usually the value that will be collected from the customer. Okay. So that is the invoice value. So usually it will not be including of GST. But if you want to include GST also, you can include GST. Nothing wrong in that. Okay. But always tax is payable on the taxable value. Sir, will the invoice value and taxable value will be same? Yes. Invoice value and taxable value will be the same. So if there is no additions, otherwise there could be difference between the invoice value and taxable value. So don't add the GST to the invoice value. So because sometimes when the taxable value is like same as the invoice value, so then you need to take the same number. So that's why don't add any GST to the invoice value. But logically speaking, invoice value is relevant for payment of tax. Then anything else I missed? Okay. Thank you. Now look into this illustration which is in page number 55. Look into this illustration which is in page number 55. Mr. Ram, a supplier of professional services, purchased desktop computers of value 3 lakhs on 1st July 2021 and paid IGST amounting to 84,000 rupees, that is 28% of 3 lakhs thereon. He availed ITC of 84,000 on 20th August. So 1st July is purchased. So July month whatever is purchased, he would have filed GSTR 3B on 20th August. So he would have taken credit on 20th August. Now suppose after 4 years of using the computers, he wants them to donate to a nearby charitable education institution where the fair market value is 50,000. That open market value, fair market value is 50,000. So he donated. So disposal of business asset on which ITC is availed, it will become supply under section 71C, correct? It will become supply under section 71C. And in such case, Mr. Ram shall be liable to pay an amount under GST equivalent to, what is that? A. So much of the ITC availed minus 5% for every quarter or part thereof. How many years it is used? 4 years it is used. 4 years means 4 into 4, 16 quarters. So 16 quarters into 5%. So 80%. 16 into 5, 80% you take out. Means 80% you can use, remaining 20% only you need to pay. So what is the ITC? 84,000. 84,000 into 20%, that is 16,800, or GST on sale value. What is the sale value? We don't have the sale value here. So, but we have the fair market value. Take that fair market value 50,000. What is the rate of GST? 28%. That is 14,000. Whichever is higher, that is 16,800, will be the GST payable. So, as transaction value not available, so therefore fair market value considered as per rules. Got it? So, therefore Mr. Ram is required to pay 16,800, and ITC, suppose if ITC is not availed on the computers purchased, okay, if ITC is not availed on computers purchased, and it is sold for a consideration and sold for 50,000. If ITC not availed on computers purchased and sold for 50,000, then what we need to do, sir? If ITC is not availed on the computers purchased and these computers are sold for 50,000, then don't apply 18 subsection 6, because 18 subsection 6 applicable only when you avail ITC on the capital goods. So in that case, what you need to do, normally you need to pay, that is take the normal GST computation, sale value into GST rate. What is the sale value? 50,000. Okay. So here that line is missing here. That is, if ITC not availed on computers purchase, okay, and sold for rupees 50,000 and sold for rupees 50,000, then GST payable will be 50,000 into 28%, that is 14,000. Okay. Next. So this is how we need to determine. Now I am just giving you one more point. Sir, whether that business asset is only capital goods or even stock will also come into this discussion. For example, I purchase some raw material and on purchase I avail the ITC and I disposed of that raw material, okay, without consideration. Will this come under 7(1)(c), disposal of business asset? Yes, because business asset need not be only fixed asset, it can be fixed asset or current asset. Business asset need not be only fixed asset, it can be fixed asset, okay, it can be fixed asset or current asset. It need not be only, fixed asset. Where is it given, sir? It is given by IDT committee of ICI. So they have given an article related to that. You can see it in the next page. What is the meaning of business asset? It is not defined under the Act. So therefore, we need to refer to the general meaning, and business asset is of wide connotation. It includes every asset of business, including capital goods, finished goods, raw material, etc., which means fixed asset or current asset. So that's where business asset can be anything. Then, now listen carefully. I am giving you one question. You need to answer that. So I purchased raw material, availed ITC on the same. So I have purchased RM and availed ITC. Then converted to FG, converted into FG. So I purchased raw material and availed ITC and converted into FG. Okay. And such FG is distributed as free sample. Now tell me, is it supply or not a supply? Come on. So answer the poll. Answer this poll. Purchased raw material and availed ITC. I converted it into FG and such FG is distributed as free sample. Now, is it supply or not a supply? Is it supply or not a supply? Is it supply or not a supply? It is not a supply. Why, sir? What I disposed of is finished goods. Whether I availed ITC on finished goods? No. I availed ITC on raw material. But what is disposed of is finished goods. Therefore, it is not a supply. Yes. It is not a supply. You understood? Why, sir, it is not a supply? Permanent transfer or disposal of business asset on which or where it is availed on such assets. So here, whatever you dispose of, you should have availed ITC on that. I disposed of finished goods, but finished goods I did not buy. I made. So what I purchased is raw material. Whether I disposed of raw material? No. Therefore, in this case, it is not a supply. Look into the footnote in this page. Look into the footnote in this page. WIP and FG do not fall under business asset on which ITC availed, as ITC would have been availed on inputs which were purchased. Okay. Now, suppose, sir, if I am a trader, okay, if I am a trader, answer this here. So, trader purchased goods and distributed and is distributed as free sample. Is it supply or not a supply? Now answer. Trader purchased goods and distributed as free sample. Is it supply or not a supply? Trader purchased goods and distributed it as samples. Is it supply or not a supply? Okay. It is supply. It is supply. Why? Sir, trader purchased the goods. Usually, trader when purchased the goods, he would have availed ITC. Now, when he distributes it as samples, so permanent transfer disposal of business asset on which ITC is availed, therefore, it will be coming under supply. Okay? Understood? So, for the manufacturer only, that relief is there, not to the trader. Got it? Now, so from this only, I just gave you this. If it is capital goods, you pay GST under 18 subsection 6. But why here any goods, GST payable under section 15, GST payable under section 15 means normal valuation. That is sale value into GST rate, normal. Whatever is the sale value, multiply with the GST rate, that is the GST payable, okay. So, why any goods GST payable under section 15 in this case? Because ITC not availed on business asset. Because ITC not availed on business asset, so we will pay as per normal way only. And even if we avail ITC, only for capital goods 18 subsection 6 is applicable. Other than capital goods, again section 15 only. Understood? So 18 subsection 6 is applicable which in which case? Capital goods, that too on which ITC avail. If ITC not avail, 18.6 will not come. And if it is not capital goods also, 18.6 will not come. Then what we need to do? Pay as per section 15. What is section 15? Normal valuation. That is transaction value into GST payable. Assessable value shall be transaction value. So that is the price involved in the transaction, and on that you need to pay GST. Got it here? So now say this. Whether disposal of finished goods by a manufacturer without consideration falls under disposal of business asset on which ITC is availed. No. Why? Because even though finished goods and business asset of a manufacturer, business assets of manufacturer, but they are not purchased but manufactured, and therefore do not fall under the ambit of the word business asset on which it is availed. Consequently, it is not a supply. Okay. However, it may fall under any other activity. So, I'll just stop up to this because the remaining points has got some other discussion, so that we will see in the next class. Here. So from here we will discuss in the next class. So what we discussed today is that related party meaning, then employer employee analysis, then disposal of business asset, connecting 18 subsection 6. So this much we discussed in today's session, and if you have any doubt you can ask related to today's or yesterday's session. Sir, free sample comes under 17 subsection 5. That is 17 subsection 5 says goods purchased and distributed as gifts or free samples. So in that case it is a blocked credit. Again there also they use a word purchased goods distributed as gifts or free samples, not the manufactured goods. Okay, so that's why I will discuss that area, connecting area, in the next class. Tomorrow's class you will understand that. Yes, today I will be sharing the assignment. Okay, so in the telegram group, in this telegram group itself, afternoon I will share the assignment, and you carry on with that assignment related to import of services. You submit the answers. So tomorrow morning class we will be discussing that assignment. Okay, so tomorrow class will be in Zoom session only. Tomorrow is a Zoom session only. Okay, thank you, and then we will meet tomorrow. If you don't have any queries. Yes, thank you. Take care. Sir, when is the MCQ test for chapter 1? Mostly today I will make it done, so that tomorrow you can take care. I'll let you know. Okay, once that is updated I'll let you know. Thank you.